G'day folks, welcome back to another stock market review. It's getting late, close to my bedtime, but it's worth putting out this video with the current stock markets taking a bit of a dump as in the last hour or two. Now, before you go any further, make sure you hit that like and subscribe button to support the channel, and don't forget to reference the +1 videos where we look at deeper dive into the trading strategies. In terms of the outlook, a policy shock, especially around trade or interest rates, can rapidly unwind leverage and sentiment. In 2025, markets are already stretched, valuations are high, breadth is narrow, and many investors expect easier monetary policy ahead. Instead, we see unexpected hawkish moves, higher rates, or a sharp escalation in geopolitical trade tensions, especially US-China, has sparked a cascading sell-off across all major indices. Let's get stuck into the charts. So let's start off with Germany. Now we look at the weekly, daily, and hourly chart for each market we're reviewing. I won't go into any further detail apart from these three charts for each. So on the weekly, first off for Germany, you can see there it's still above the moving averages on the weekly, although this week so far it's taken a bit of a hit to the downside. Also notice we've still got a bearish divergence on the CCI with lower highs. So looking okay so far for the weekly for Germany. On the daily for Germany, it's hit this resistance. It hit it a couple of times and it's bounced off there again. And this time it's actually bounced a lot or dropped a lot lower towards these moving averages. And here we've got, and there's no, let me just have a look. Yeah, there's still a bearish divergence there on the daily. So just measuring from those points, slightly higher highs on the price versus, that's also high as well. So I wouldn't call that a divergence. I'm going to delete that. So on a daily, it's pretty much moving in line with the price. On the hourly though, you can see there we had a strong bearish divergence, lower highs there versus the same period on the price. That's actually come back down and went right through our 23-38% target range and dropped right down. So it looks like it's still got a bit of way to go. So don't go placing any long orders yet until we see a reversal on both the CCI and the price moving averages as well. I'd like to see the moving averages break above on the daily as well to be more bullish, but at the moment, very bearish. Now, if we go to the Japanese market, so what we're looking at here again for the three charts. On the weekly, first off, let's wait for it to build. You can see there it broke through our previous resistance there, but that's still a bearish divergence from our last video. So lower highs on the CCI versus the same period. We just adjust that. We adjust that trend line to that point. So that's a bearish divergence in the same period. And we may very likely see a lot further downside on the weekly for the Nikkei. On the daily, there was also a bearish divergence there versus the price. And again, very likely going to see a further decline on the daily. And on the hourly, that's already crapped itself. You can see there lower highs on the CCI versus higher highs on the price. And this one has actually come back down on the hourly well past the 61% level. And you can see there's no sign yet of a recovery for the CCI or the price on the hourly at least. On the US market, on the weekly, we drew this bearish divergence some time ago, and it looks like it's starting to turn down at the moment into that moving average range on the weekly, on the CCI, but still above on the price. So not too bad on the price yet on the weekly. On the daily, it's already broken through that moving average range on the price. You can see there the CCI is also punched through to the downside. Now we've drawn a very long-term target here. Hasn't reached it yet. And that goes from the Fibonacci. Let me just expand that for a moment. That goes from the Fibonacci from that high. We'll take it back down to that low and just readjust that. And that'll be our fresh target at 23-38% as a minimum. We expect it to hit that range. Now, the daily's starting to turn bearish. On the hourly though, that's already taken a massive hit. And if I was to draw a Fibonacci on that, we take it back from that high. You could probably argue take it back to that one. It's already broken through the 100% rate there. Let's take it back to that one. It's actually just coming punched through the 61% Fibonacci range. So that's looking weak as well, with no sign of recovery yet on the 1 hour chart. On the Nasdaq, looking at the weekly chart first, and that's very similar to the Nasdaq. Not too bad so far. Still a bearish divergence on the CCI versus the price, and it looks like it's starting to turn back, but nothing too dramatic yet on the weekly. On the daily, again off this resistance, and it's starting to punch through to the downside on the CCI, and again a lot further to go still. Again, no sign of a recovery on the daily. And on the hourly, again a massive drop down to that level, beyond 100% of that period there. But if we take it back to from that high down to that low, you can see there it's broken through the 50% and approaching the 61% Fibonacci. Again, zooming in, there's no sign of a recovery yet on the CCI nor the price. On the ASX, and give it a second to draw. And on the ASX, on the weekly first off, now here we had a punch up there on the moving on the CCI. That's actually risen, so I'm going to invalidate that divergence, which was that period there. But if you extended that longer term trend line, that's still a bearish divergence on that period. Now, to draw a Fibonacci on this one, on the weekly, we take it from that high down to that low there, and we expect it to reach, if it does keep falling, again these could always change any time, so there's no guarantee of any of this happening, but with all probability it'll drop down to the minimum at that level there on the Fibonacci. So I'll keep that there for the time being on the weekly. On the daily, double top up there, and that looks still like a bearish divergence with that double top. Slightly lower highs on the CCI, and again, if I was to draw a Fibonacci on that one, on the daily, we go from that high down to that low, and we expect to retrace somewhere in that 23-38% range. And on the hourly, this wasn't probably too bad compared to the other markets, but still we've got a bearish divergence there. Slightly lower highs on the CCI versus the price. And that's pulled back quite strongly. And again, using a Fibonacci down to that level, down to the 61% range. So again, no sign of a recovery yet. We might have further to go on the Australian market. For China, on the weekly first off, had a bit of a roller coaster event here. We had a bit of a bounce here with a bullish divergence, and since then it's been rising. Now there's no divergence there for it, so you can see there a bit of a pullback on the weekly, but that seems to be moving in line with the price, so there's no divergence there. On the daily, again a massive move to the downside on the daily. Now we had a bearish divergence there to let's take it to that level there. Hit that resistance up there a few times. That's higher highs on the price, and again Fibonacci retrace from that high. Let's take it back. It's gone well past the 23-38%. Let's take it back to that low there. You can see there it's just touched that 23% range. So I think it's going to go a lot lower yet than where it is at the moment. No sign of a pullback yet. On the hourly, just zoom out a bit, get a better perspective. Go from that high to that low versus the price. That's a bearish divergence, and we can take it to that level. You can see it's gone past 100%. Let's take it down to that level, and it's gone almost near the 61%. So again, looks like a potential recovery on the CCI, even though the price is dropping lower, so may have a further downside to go. Now lastly, let's look at the French CAC. So on the weekly, we had a bearish divergence here, to that point versus slightly higher highs on the price. Now this one seems to have dropped earlier to that point, down past the 50%. So it's already hit that divergence target and it's bounced off that. But this week so far it's actually showing an engulfing candle compared to the previous week. So not too, still a bullish momentum at the moment on the weekly for the French. On the daily, we had a bearish divergence back there. So that's already seems to have occurred. Dropped suddenly, dropped more than 100% on that range. And currently that CCI is moving along with the price. So there's no divergence currently on the daily. And lastly, looking at the 1 hour chart for the French CAC. Again, we had a bearish divergence here to that high. That's dropped off, and that would have been to that level. That's gone just below the 61%. It's bounced, and since then we've had another, if you extended that to that level, we would have extended that Fibonacci as well. Let me just take that there. And that's dropped past the 100% retrace level. So those two divergences worked as well. So coming back to the S&P 500 for a moment, just looking at the 1 hour chart here, for example, I'd be waiting for this to probably retrace, come close to that moving average on the CCI. To jump in now might be a bit risky because it may actually retrace and start to go bullish again, because looking at the daily chart and the weekly chart, for example, the daily is bearish at the moment, but the weekly chart's still somewhat neutral to bullish, even though it's got a bearish divergence. Again, I'd wait for the retrace and wait for a new break to the downside on the CCI, and before taking any further short trades, that'd be my strategy. But also, again, to see a correction to the upside or going back to a bullish environment, I'd like to see the daily also break higher than the moving averages on both the CCI and the price. I also wanted to add Bitcoin and Ripple to the equation of the stock markets crashing. Here we've got Bitcoin on the weekly, still a bearish divergence. We did a video on this a couple of days ago. And on the weekly, we've got a target set range there on the 23-38% Fibonacci range, hasn't hit it yet. On the daily, that's also collapsed in line with the other stock market, with the stock markets. Both the price and the CCI have dropped through the moving average range. If I zoom out, you can see it's got a pretty much equalized in that range, been consolidating in that range now for some time, between 110 and 125,000. And on the hourly, previously that 23-38%, on our last video it hit it, bounced off it, and then it finally broke through again, and this time it's gone almost near the 100% retrace level of that low there. It's gone well past the 61%. Now the positive news here is it's actually retraced and into that moving average range on the CCI. So a couple of things here. Either it could start reversing, and in that case we want to see the daily also break higher than these moving averages before taking any long positions. Otherwise, if you are shorting Bitcoin, if you're one of those people, then you want to wait for this to break further to the downside. The price is already below its moving averages, so you're already there on price. You just got to wait for the CCI to break below that moving average to take another short position. For Ripple, we've got a similar sort of pattern as well. So looking at the weekly first off, as soon as we get there, here we go. So on Ripple, it's already hit that 23-38% on the weekly. We've got a massive bearish divergence for the weekly. On the daily, it broke through this support level we had previously. It was consolidating there for some time, and it's below the moving averages of the price and the CCI, so bearish momentum on the daily. And on the hourly, again, you see there it's been in a steady downtrend on the price, with the moving averages fluctuating up and down until finally breaking clear and dropping a lot further. Similar to Bitcoin, Ripple's retracing back towards that moving average range. So again, if I was going to take short positions, I'd wait for that to come close and then either touch it and then start breaking to the downside before taking short positions open there. Otherwise, as we said, to take long positions, I would wait for the daily to break up above the moving averages on both the CCI and the price to be bullish. So that was just a quick recap of the current situation with the stock markets. Also, if you want to get a deeper dive into some of the bullish shares that may occur. We do a weekly bullish scan, and these are the trades that we would have taken in the last month, generating 2,900 of trades with $5,000 lots of transactions. These are published on the Patreon page, so links in the description below. So make sure you go to that website and subscribe at least on the free trial to get some of those scans showing up and analysis on shares to trade. Thanks for watching. Hit that like and subscribe button, and see you in our next update.